Well, good morning, everyone. Thomas Montgomery here. We get together most weekday mornings at 8 o'clock Central to talk about strategies, tips, techniques, share success stories, and support each of you. Periodically, we like to come back and reflect on some recent funding success stories. And as you may know, there's really two types of funding success stories. There are those from the first tranche when clients first come aboard. And then, of course, there's the end goal of once we have created a fundable business. But we'll look at some of those here towards the bottom of the page in a minute. Let me go ahead and make this just a little bit larger so we can make sure we're all focused on where we're at, and we'll scroll through. So again, if you or someone that you know needs funding to start or grow a business, refer them to fundingproposal.online, and no upfront cost, they can get a funding proposal. If you would like to be a distribution partner, we will provide you a landing page that looks just like fundingproposal.online, and of course our phone number. We have different backline numbers, and backline numbers mean that we call out of. I think we have 62, 63 backline numbers for our team to call out on. If you call us on a backline number, it may not be answered. There might not be voicemail. You want to call the main number. All right, well, let's start with a synopsis of, well, what is it that we do again? Because we're going to get down to the funding success stories, which is our topic today. But before we get there, let's go back and revisit, well, what is it that we do? Now, as we go through this, have any questions, comments, concerns, you can type it into the Q&A. It's like a chat box in Zoom. So first of all, what has allowed us to grow so quickly is, I believe, our client-friendly model. What do I mean by that? First of all, there's no upfront cost. There's no upfront cost. Clients come to fundingproposal.online or your landing page that looks just like that if you're a distribution partner, an affiliate as we call you. And so clients do not pay up front. Now, does it mean it's a free program? Of course not. How would we pay you a minimum of $5,000 for each person you refer in if it's free? It's not free. We're not saying free. We're saying no upfront costs. So make sure we are clear on that. Secondly, no risk. And so those are two pretty good bullets to start with, right? Number one, no upfront cost. Number two, no risk to the client. And then, just as I was mentioning in the opening, our goal is to get clients their first tranche, their first round of funding very quickly. And so that is typically enabled right away, often within the same business day or within one business day. But don't be confused by that. That doesn't mean, oh, sign up and all of a sudden you qualify for 100,000 or 500,000 or $1 million. You might. But most clients need work, they need help, and that's kind of our value proposition. So every once in a while, we'll work with someone that just can't get it. It's like, well, my client didn't get $100,000 in the first 24 hours. Well, we didn't say that everyone would get $100,000 in the first 24 hours. So some people will get that type of offer, those type of offers, of course. Everyone will get at least one offer, regardless of how horrible their circumstances is, for their first tranche. But in many cases, there's work that needs to be done to get the clients fundable. And we're going to talk about that, of course, in a moment. But when I talk about no risk, this is a legal, compliant guarantee. We promise every client a minimum of $100,000. And that's great, right? So that goes back to the fact that in addition to the client having no upfront cost, they have no risk. By going through the process, they know they'll get at least 100,000. Some people get this confused and say, oh, it's up to 100,000. No, that's a much different terminology. Our grant, our contract states a minimum of 100,000. But frankly, that's a bilateral promise, just to be clear. So bilateral means both parties. So clients that are coming through, they promise to work with us to raise at least 100,000, and we promise to work with them to get them at least 100,000. I think that's very fair. All right, so but before we move on, I don't know how big I can make this and we can still see it. I just want to kind of control what we're talking about. So from this section here, Anyone have any questions on the model itself? All right, well, let's move on then. If you have any questions, comments, concerns, type it into the Q&A. It's like a chat box of Zoom. The second element that makes our model unique, in addition to what we just discussed, which we summarized as a client-friendly model, is our affiliate program. We have a rapidly growing affiliate program. If you're not familiar with affiliate programs, then you might want to acquaint yourself. As we've mentioned recently, from the research that we've seen, 80%, in other words, 4 out of 5 medium to large businesses have affiliate programs. So it's not, frankly, unique to us. Amazon, Best Buy, Experian, many organizations have affiliate programs. We have one as well. Ours is a bit different. It does follow the basic concept. So in general, an affiliate program means you refer a prospective customer to the merchant, and if they enroll, you get paid. And that is with ours. We provide you a free landing page and you get paid. What makes ours different is how lucrative it is. As you might have seen, if you've signed up as an affiliate, or if you haven't and you want to become one, let us know. But we pay out 5 points. 5 points. So let's do the math on that. So if the client's guaranteed a minimum of 100,000 and you're making 5% of that, then you're making a minimum of 5,000. So I know you're probably very successful, so an extra 5,000 is not life-changing, but that's per deal, right? Per deal. So if we can string together multiple deals per month or per week, now it really starts to add up. Our affiliates don't have a production requirement, so they can dabble if they want, or they can be more active. Our average affiliate, our typical affiliate, refers in 1 a day, and assuming we take weekends and holidays off, we're looking at around 20 a month. Well, again, it's a reputable side income. You take 20 times 5,000, extra 100,000 a month. With that being said, it's simple. It's simple. So some of you are so smart and so experienced, you make the affiliate program complicated, and it shouldn't be. It shouldn't be. There's only 2 things that affiliates do to make 5,000 minimum per referral. Refer people to your free landing page, which will look just like fundingproposal.online, and get paid. Refer and get paid. So, do I have to go get the client under contract? No. Do I have to go collect money from the client? No. Do I have to service the client? No. I mean, there's 2 steps to it. So let's just make sure we're all clear. Affiliate programs are designed to be simple, and ours is simple. Now, some of you wanted more of a leadership role, so we've recently launched that. And there's no cost to be a master affiliate. A master affiliate just means that you have sub-affiliates underneath you. So the sub-affiliates make their normal amount, you make an override, but there's no cost. This is not MLM, it's not network marketing, it's just simply an override. All right, any questions then on the second bullet on our affiliate model? Okay, well, let's move on to kind of where the rubber hits the road. So the most frequent criticism that we get, I believe, is, well, this sounds too good to be true. And that's typically by individuals that are not stopping and understanding what we're saying, as I've already sought to clarify with you today. We do guarantee 100,000 for each participant, but that does not mean that the moment that they enroll that everyone qualifies for 100,000. That's too good to be true. Now, we'll get them through their first tranche what they qualify for now, so that's good, but there may need to be some work done, because it's just not too good to be true. That would be too good to be true to say anyone can sign up and everyone will qualify for 100,000 the next day. So essentially what we do is we create legally and ethically fundable businesses. That is what we do. We create fundable businesses. Well, how do we do that? Well, what's going to make that client fundable? That sounds too good to be true. It's not. Anyone that has any familiarity with business or business finance, this makes perfect sense. Well, one of the things that we do is build a lender compliant loan package. When the three of us formed this, Chuck, Mark, and myself, this model many years ago, we all came from the SBA. And this is what we did on a daily basis. The government paid us to work with small businesses to build loan packages. So what's in a loan package? A business plan. Now, all business plans are not the same. And then also different lenders have different requirements for elements of a business plan. So that's one of the most common mistakes that we see with clients and sometimes with distribution partners is they try to funnel everything into one bucket. There's one loan, there's one lender, there's one set of requirements. No. There's many different buckets, and each bucket has its own pile of money and its own requirements. So, but we do create a lender compliant business plan, frankly, using the same software that the SBA uses, that I used when I was an SBA advisor. And also we create financial projections. Normally we'll create the financial projections out 36 months, 3 years. Well, why are financial projections so important? Well, a lot of times the clients that we're working with don't have strong historical financials. Therefore, if a lender were just to look at how the business has performed historically in the past, often it's not strong enough to get approved. Therefore, we have to create a case legally and ethically that the business should get the funding, that can afford it, and then it will repay it. So the business plan and financial projections. And so these are two important elements that we do for free in what we call the Access to Capital program. The Access to Capital program is accessed through fundingproposal.online. Any questions anyone has on the business plans and financial projections? All right, Charles asked if they already have a business plan. Is that okay? Sure. Yeah, we're not here to fix anything that's not broken. So if the client already has a business plan and financial projections, that's great. That makes things go even faster. That's better. So yeah, never get confused. But with that being said, we do realize different lenders have different requirements for a loan package, and the business plan that a client might have might be suitable from their perspective, but it might not be from the lender's perspective. But there's many different lenders, and so what we're going to do, and we'll talk about it in a moment, is find the right lender for the client. All right, so furthermore, so again, not too good to be true. We're going to build a lender compliant loan package if they need assistance. If they already have it, great, we can skip that step. In many cases, why clients need the resource that you and I offer together is they're not credible enough on paper. And when it comes to business funding, it's the same thing that we learned back in 6th grade, 7th grade, 8th grade, whenever you learned it in your school. The 3 C's, right? So there shouldn't be a mystery. What do we need for a business to get funding? We need credit, but we're talking about business credit, not personal credit. We need collateral, and we need capacity. So a lot of clients will come to us and they have an inadequacy in their 3 C's, or they have a brand new business that has none of those. That's fine. That's what we do. That's what we're very good at, is building those 3 C's. What that means depends upon the client's mitigating circumstances. So let's say the client wants $1 million versus just the 100,000. Well, would you have to have a stronger package to qualify for $1 million than you would 100,000? Sure. And Ernest is bringing up a good point in the chat, and I'll just share it with everyone. It's kind of like getting a mortgage, right? People don't think it's a freaking mystery to get a mortgage, right? There's different types of mortgages, USDA, FHA, so forth, and there's different requirements. I think people are kind of familiar with that. Well, that's very similar to what we see on the business side. There's different types of business loans and business financing. each have their own underwriting criteria, but in general, what we need to get approved is to have a fundable business, which is shown here, and that's what we're bringing to the table. Because we're not the lender, we're not the bank. When you look at our business card, we're not the bank, we're not Chase, we're not Bank of America, we're not Wells Fargo. What you and I do through this model is called technical advising, which is what we did at the SBA. We're just doing it through the nonprofit. And then the third, so we have 3 sub bullets: build a lender compliant loan package, build out the 3 C's, and then of course facilitate funding, because that's the goal. The goal is to become fundable. I have one distribution partner, smart guy, and I was talking to him yesterday, and he kind of said something that made me want to share with you today without mentioning his name. He's excited. He's a real high energy guy, and he's like, I'm ready to go to funding, I'm ready. But he doesn't have a fundable business. So can you see the difference between just someone saying, I want money, or I need money, or in their mind, I'm ready for funding? But the truth is, do they have a fundable business? In many cases, they don't. And that's a big barrier, right? Because there's not some underwriting checklist that the bank has that asks, well, is the client ready? No, is the client fundable? Are they qualified? Hopefully that makes sense, but so often people get so emotionally involved with money, they overlook the logic. And if we follow the logic trail, any business can get funding. So 3 bullets: loan package, building the 3 C's, and then get access to funding. And we've agreed that there's different types of funding programs. All right, so let's scroll down then. So as I mentioned, there are many different types of funding programs. There's different banks and alternative lenders, and then even within a given bank or lender, often they have different funding programs. So as I mentioned a moment ago, I'll just reiterate, that's the most common barrier or obstacle that we see people having, is they think there's just one source of funding. There's not one source, there's many different sources. So part of what we need to do as we're working with a client is to identify what is the right source or sources based upon their mitigating circumstances. So, what's in the business plan? I know I'm bouncing back, but this is relevant, I think. Well, how much funding do they want? So we have Annette on here. So Annette, how much funding are you looking for? Now, I'm in trouble if Annette says, as much as I can get, because that's a very nondescript amount. How do we build a business plan for an unknown amount? That doesn't float. That doesn't work. So we have to identify how much funding is the client seeking, and what are the uses of funds? What are they going to use that for? And so with that being said, our business plan should tell the reader this. I talk to many clients, and some of you, a lot of you are chatty, which is fine. That's a positive attribute. And then a lot of clients are chatty. But clients are not going to have the opportunity to be chatty with the underwriter of the lender. We need a loan package. We need to tell our story in writing. And that's why we need a loan package with a business plan that talks about how much funding we want. Why I digress to that again is that there's many different types of lenders and lending programs, so we need to match the client based upon their circumstances. Here's the most basic example, so it'll instantly make sense. What if the client wants to buy an apartment complex versus working capital versus a fleet of company cars? Those are very easy to understand different uses of funds, which would impact where we would go for the funding. All right, so obviously we have access to many different financing options, and I don't want it to be the 3rd or 4th time that I say it, but there's different types of financing options, right? There's term loans, there's SBA, there's non-SBA. Let's talk about SBA loans for a second. Even within the SBA environment, there's multiple SBA loans, but what's the truth? The truth is the SBA is not the lender, they're the guarantor. So we're still going to go through an SBA approved lender to get an SBA guaranteed loan. But here's what I know, and if you feel differently, we can debate it. But I've had conversations with presidents of banks, so I know this to be true. Most banks, not all, but most banks that offer SBA loans would rather not offer an SBA loan. So what happens is the loan application first comes to the bank or to the lender, and then they do their underwriting, and it may very well be that they don't want to attach an SBA guarantee to it because that adds to their paperwork and their expense. So what's my point I'm trying to make here? Multiple different financing options, but we really don't need the client to come to us and say, well, I definitely want an SBA loan. Well, what if you could get better terms on a non-SBA loan? So this is the end result. Where we go to funding is the third bullet based upon everything above here. So with that being said, I think the point's made. We have a heavy focus on helping borrowers who have been turned down previously or who are otherwise unqualified. Now, we certainly have some clients that come to us that are qualified, but our focus, our mission is to help those that are that otherwise don't have access to capital. And that's great for you and I, because that's kind of an untapped marketplace. You and I in general work with the people that others don't want to work with because they're imperfect. Their file's imperfect. They need help. Well, guess what? That's what we're in the business of doing. Another analogy, which you'll probably hate me for, but let's say you and I are mechanics. So if you and I owned a mechanic shop, would we target the new car buyers down at the Mercedes dealership? No, that's not our target audience. We want to help those individuals that don't have perfection, that don't have a perfect business. Now, can we still help the perfect ones? Of course, but our bread and butter is in fact helping people who are otherwise unqualified to help them become qualified. All right, so then we scroll on down here. There are many different loan programs, lending programs, as we've talked about. We have one program which we call Fund and Grow, and it's through an FDIC insured bank. And I mention that to just say it's mainstream, right? It's not some sort of alternative lender that's high risk and very expensive. Not at all. But just let's look at the Fund and Grow platform for a moment. No minimum personal credit score. Now understand, we're not the lender, right? We are not the lender. We've already covered that. So when I say this is what the lender has as their underwriting. That's very attractive. Now, it's not unlimited funding. Currently, they say, their underwriters tell us that the maximum that they'll loan is 15 million. So maybe you have clients and that's not enough. I respect, but that's a pretty big range, isn't it? From 1,000 to 15 million. They feature streamlined underwriting. They have no minimum revenue. So in other words, a startup can come in. No minimum time in business. In other words, a startup can come in. Most business types eligible. I get asked this a lot. If your client, if you're working with a client and they're involved with child porn or fentanyl distribution, there's not many funding options for those really high risk illegal businesses. But as long as we're staying away from the illegal marketplace, you and I can help them. This FDIC insured bank works nationwide, and that's important because, as I've disclosed on some of our other trainings, not all lenders do financing everywhere, but this one does. And they're still unusual. We have one lender which is different than this one. They were doing SBA guaranteed loans next day. Now they stopped that. Now it's about 7 to 10 days, but they were doing SBA loans next day. So sometimes there are outliers. There are lenders that have programs that are unusually good, and that's great. And we're keeping our finger in the pulse to work with those. So anyway, so we're not trying to distract you. I'm just trying to give you an example that we need to bring clients in through your landing page, which should just look like this. All you need to do is refer in and get paid. Our team does the work. You're going to get paid 5 points, minimum 5,000. If you want to be a master affiliate, you'll get a 2-point override. Lots of different lending programs in the marketplace. We'll help figure out the right one based upon the client's mitigating circumstances once we have all the pieces put together. Normally, this is a 30 to 60-day process. And then some recent closings. So a little over $2 million for a car wash. So this was an instance where they needed to, it's a startup, but it's more than a startup, right? They needed to construct the car wash as well as purchase the franchise and such. 453, almost 500,000, almost $500,000 to start an ice cream shop. That sounds good, doesn't it? On a summer day. 137,000 line of credit for a daycare center. 500,000 working capital for oil and gas company, 275,000 business credit line for a gas station, 90,000 for a real estate company line of credit, 179,720 for a wellness company to buy some specific specialized equipment, and just short of $1 million to buy a retail strip center. So with that being said, let's kind of wrap it up today. We hope that you are one of our distribution partners. We hope that for 2 reasons. Our distribution partners, our affiliates, allows us to go help more clients, and it generates a new income stream for you. So if you're not an affiliate, not set up as an affiliate, you don't have your landing page that looks like fundingproposal.online, give us a call. Let's figure out what's broken and we can fix it. Our goal today was to step back and make sure that you understand what makes our approach unique, who we work with, how we help them, some unique lending programs, and some recent closings. So who has questions, comments, concerns on what we've covered today before we end today? We try to end on time at the bottom of the hour. You can type those questions, comments, concerns into the Q&A box. From an action step, and I like Kenneth. Kenneth is kind of to the point. What do I do now? Well, Kenneth, if you are an affiliate, let's drive some people to your landing page so we can help them get funded and you can make money. That's the action step. If you're not an affiliate, I encourage you to reach out to us and let us get you set up as an affiliate so you can make money and help people. Once you become an affiliate, you can let us know. Do you want to be on the leadership team? Do you want to be a master affiliate? No, there's no cost to be a master affiliate. We'll provide you a landing page for that, in addition to the normal landing page for clients. It's a credible, it's a reputable, it's a legal, it's a good program. The key is understanding it and then also keeping it simple. So many of you are so smart and so talented. I think sometimes you talk your clients out or prospective clients out of participating. What do you need to do? Get your landing page from us and then refer in. Get paid. We do everything else. Anyone else have any questions, comments, concerns? All right, well, let's go make it happen. You know how to reach us. You know how to get started. And the ball's in your court. I so often have clients or clients and prospective distribution partners that tell me they're too broke to make time to make money. And that's kind of an ironic. They're too busy being broke. So let's not be too busy being broke. There's a great opportunity to help people. It's easy. It's real. There's no risk to the client. It's proven. We've got success stories. Let's stop making excuses and let's go make money together and help people. All right. Well, have a great day. We'll see you back Monday morning. Bye-bye.